Ladies and gentlemen, welcome to the Big Tech Frenzy. In today's video, I think I need to start it off first with talking about Bitcoin. Another all-time high has been secured. Congratulations, ladies and gentlemen. $124, $250 per coin. Absolutely incredible. In the last little bit, we've continued to push higher. Michael Saylor's a happy camper, being one of the largest shareholders of Bitcoin, including Strategy, obviously making, one of the largest wallets out there. So, I mean, unbelievable success. Congratulations to the holders out there. We have other news that I want to talk about. I really want to talk about Google. I want to talk about Robinhood. We saw monthly data come in. You guys know what we have to do. We got to bring out the charts. We got to talk about what they ended up showing off. And then there was also an interview with Vlad Tenev, which I thought was extremely insightful. He did it with John Collison, who's one of the co-founders of Stripe, the two Collison brothers. So should be extremely exciting. New glasses, Tanner, not even. These are my same olds. But thank you for noticing the non-existence of my new glasses. Anyway, yeah, dude, Bitcoin's still pushing higher. Incredible. 124, nearly 500 now. This is pushing new highs. Wow. Okay, very cool. Congratulations, ladies and gentlemen. I'm also a pretty enthusiastic ETH holder right now. This is one that I'm following very closely. I've got, shares in SBET as well. Should have played both SBET and BMNR. There's a conversation that I want to have potentially about me investing into AMD. There's going to be a time where I have to end up trimming NVIDIA just based on the total share of it in my portfolio, but I don't want to get out of the chip sector or anything like this. I just feel it's a little bit too risky to have more than 50% of my entire portfolio in one singular name. So there might be some time, as well as some other small funds that I have that help with lowering my risk and diversification, but they're not individual plays. They're more income funds. I might also roll some of those into AMD based on reports today that NVIDIA might see AMD as more of competition into the future. So in no way is that going to make me trim NVIDIA as a percentage of my holdings. I'm not taking that down, but as they continue to accelerate, it makes up for too much of my portfolio. So I've already said that I would trim that and that would become cash. It's just, what do I do with that cash? So potentially AMD might be a top target now after some reports today. I mean, that's the data that we have to go off, right? We have to go off what are the partners saying, what are their competitors saying, do a couple of channel checks that way and see if the vibe is sort of changing. And who knows? Something to take a look at. Speaking of things to take a look at, dLocal. I was this close to going live to talk about their earnings, but I didn't know what the appetite would be. Obviously, not forward looking. I think we're up nearly 30% on the in after hours now, up 26%. So a slight pullback, but on a great double beat and raise. Their statistics that they end up showing off on this payments company is quite exciting. So could be a name that I absolutely dabble into even after a large acceleration in growth, because it honestly is one of the cheaper names for its style or for its rate of growth. There was just some restructuring issues and potential legal issues that people had also suspected for the business as well. But if they continue to grow at the level that they're growing, potentially a lot of that, concern gets brushed to the side and people get to buy an insanely fast growing payments company, and you're looking at a sort of a way of buying an Adyen without having to buy, um, quite as expensive of a name. So that could be quite interesting as well. Kelly, I'm talking about D-Local, DLO. It's this stock right here. It's once again another LATAM name. I cannot get away from these LATAM names, but they're in the payments industry. They famously brought Meta to LATAM, and they work with other big names like Spotify, Netflix, all of these different companies. And not only are they in LATAM, but they're also in the Africas, Asias, or Asian countries, stuff like this. So that's sort of it. But I do have to do a lot more due diligence in that name. Sorry, popping open a Celsius real quick. Cheers. Addicted to caffeine. If I can maybe take that in a healthier sense. Green tea extract like on Celsius versus a Monster Energy or something like this. We tend to go both that way, I mean, we do with what we can. Affirm launches a Stripe terminal, on Stripe's terminal, which is their in-store terminals that they end up having, like the payment space, unlocking payments over time for in-store shoppers. I thought that was pretty interesting, especially on the back of them just doing an expansion with Google and Google Pay, two massive companies to show off back to back, nearly one day after another. The stock was up 1% today, but if I remember correctly, their year to date is not doing as well as you would expect, up 24%, but it's not like the other years that they've ended up having where, they were one of the most expensive, fintech names. If we actually look at Affirm versus SoFi, I think SoFi SoFi's a more expensive company than Affirm now. That's crazy. $28.5 billion market cap on SoFi. Another green day, 23.81, the highest close in company history for SoFi. For this ticker symbol, I should continue to say. But as we continue to improve over time, that will keep pushing into new heights. So, very, very cool. That was the last highest day, which was yesterday. Insane. New could be a miss. I'd have to look at the... Oh, sorry, I'm not very focused. I'd have to look at the assumptions for earnings. Honestly, I haven't really kept too much of an eye on it these past couple days, but I will take a look tomorrow to make sure that whenever we're doing the earnings call to see if we're going to be ready, and I'll have those numbers before we actually end up closing the market. So if I do need to make any quick trades, I will be able to, and we can talk about that publicly while the market's still open. But for the most part, I'm probably not going to be making any changes, anything like this. We're going to stick it out with Nubank. We're going to see. We would welcome some SoFi news here. Someone brought up to me recently asking if SoFi had small to mid-sized business accounts. And I was like, man, it's been a while since someone's asked that question. We still don't. We refer out those relationships to third parties like Novo, Lilly, Blue Vine, American Express, Business Checking, stuff like that. But yeah, I think that it could be a well-received addition for that new product, the SoFi Labs, which would allow for a little bit more of a buggier interface of new products. So letting people beta test and find problems in the code, find problems while using the actual products. I think that could be very interesting. SMB could be a big ad here. Small Fray, thank you so much for the membership, brother. Welcome. On the other back of that, Nubank also appointed a new chief technology officer, Eric Young. I also thought that this was quite interesting. It's another one of those things where you have to I need to listen to management, okay? But there are a couple signs where you're seeing executive after executive leave. It's not great. But we don't know if they are leaving on their own or if this is something that David Velez is sort of initiating, because he has said for about a quarter now, but the last 3 months, that they do need to do a massive overhaul of their C-suite. And now we're seeing a massive overhaul of their C-suite. So you wonder, what's happening? Is it David Velez that's restructuring the business and kicking out people or moving people around that have been there for 10 plus years? Or are those people seeing cracks in the foundation and are making the move before things come out? But that's what people worried about with OpenAI, and they've grown to be, 5x the size since those concerns had actually appeared. So it is, it's something that you need to continue to read up on. Another piece of news that I wanted to cover as well was Block. Block stock also announced an upsizing and pricing of a $2.2 billion offering of senior notes. Let's take a look at the stock really quick and see how that reacted. Stock's up 3% on the day. Wow. I'm actually surprised by that they are completely welcoming this capital raise. I didn't read into what the purpose of the thing is. Let's see what we can find for Block intends to use the net proceeds from this offering for general corporate purposes, which may include the repayment of repurchase of existing debt, potential acquisitions and strategic transactions, capital expenditures, investments, and working capital. The usual jargon, nothing too serious there. Shift4 had another big announcement, but or another big company that they ended up signing with in Europe, but it wasn't too big. But it is good to see whenever they are expanding into geographies that they've had essentially zero, market in at all. So I really like to see that. But the actual company itself was like a transportation metro type business that was not too big. But still, love to see those presses. Overall, let's jump into the main story of the day, which is Robinhood. And then after that, we're going to talk about Google. But Robinhood ended up showing off their monthly results. Now, I want to show you this in two different versions. One is the numbers that they actually posted, and then two, how I am perceiving these numbers. Okay. So first, let's just look at the raw data, which I thought was quite interesting. Here, we can see the July numbers for Robinhood, which now indicates a new line, which is the Bitstamp crypto volume. So we had $6.7 billion of crypto Bitstamp volume, and then $11.9 billion in July. The problem with this is that we don't know the take rate on Bitstamp essentially at all. A lot of this, from what they've indicated, is institutional volume. So it's not like this is just being added to the total crypto volume. The people who are assuming that their take rate before will end up going forward is like do not add this. This is going to be a separate, complete issue. I'm not going to add this to their total crypto revenue. I'm going to separate it and try to find a take rate there. But yeah. So essentially, whenever we go to talk about what I'm seeing for, Q3 revenue, which we will talk about in this video, I don't want to bring up Bitstamp. Just think of that as, even better than expected results, but not by much. In the next breath, we also see equities beating and being the best month they've ever seen in company history. They've also saw options contracts traded beating and being the highest that they've ever seen in company history, like by a long shot. Okay, like severely a severe beat on both of those. And then crypto volume, not the highest they've ever seen, but also 100% more just month over month, and puts us back in the leagues of January of 2025 and between January and February of 2025, which was a very strong time for crypto. Hopefully that continues to happen. Right now, Bitcoin, like I said at the beginning of the stream, that just hit a brand new high. Ethereum's pushing to new highs right now. We'll probably see that here in the next little bit. So looking extremely positive for Robinhood. I can definitely see them being at $120+ a share quite quickly. Only problems to sort of look at here month over month. Total days traded, 20 days versus 22 days. That does make a big difference. That's a 10% increase. You have to sort of look at that whenever you're comparing these on a daily average basis. Okay. So daily average revenue trades. There you go. Let's go ahead and take a look at what this means for my assumptions on the business. We can go through and look at total trading volume over the last couple of quarters. We've known how much they've traded on equity notional volume, options contracts traded, and crypto notional volume. Okay. This has allowed us to understand, the take rates of these, for which commissions on options has accelerated quite a lot, and equities has stayed roughly the same over the last little bit, bouncing between 0.013 to 0.014. I'm not thinking that we're going to get back to these old numbers of like a 19 or a 17 or something like this. I think we're staying down in this lower take rate at 13% or 0.013%. But for me, I'm just visualizing it as 13 here. Next, the crypto notional volume continues to just skyrocket. Over time, we continue to climb up as time has gone on. And so I foresee this climbing just a little bit even further. So once you understand that there is a certain amount of equity notional volume, options, and crypto, then we assume a take rate on top of that. We get how much we think that the revenue is going to be. Okay. On top of that, once you actually look at their operating expenses, we can assume how much their EPS and everything is going to be on the quarter. I haven't gotten that far though. All I want you guys to focus on right now this month is if we get these similar months of July, which have been historically high, okay, then this is what I'm seeing for equities, options, and crypto. Crypto going back to 50 billion, options contracts traded at 587 million, which would be by far a new record high for the business, even if, we go. Actually, we didn't get it in that because they weren't a public company. So whenever they were a public company right here, you can see options contracts traded all the way through. We are now beating brand new records, 587 million, if that's what we come in at. That's essentially just looking at the month that we just had and multiplying it by 3, assuming, like, I'm not making any assumptions, that in itself is an assumption, but I'm not making any acceleration or September crash, October trouble, anything like this. Okay, those things could definitely happen. By the way, October is the next quarter, so don't listen to me. But yeah, let's go ahead and see what that does to revenue. What we could end up seeing is transactional-based revenue coming in at $700 million, which year over year would be higher than what they did in the full total revenue line, would just be done on transactional-based revenue. Then assuming that they take a lower take rate on net interest revenue on their assets under custody, then we end up seeing another $394 million on net interest revenue, and then lower quarter over quarter, but higher year over year on other revenue, which mainly consists of instant withdrawals, stuff like this, say technologies, contracts like that. Okay. So that brings me to, once again, a quarter over quarter increase of 26% and a year over year increase on revenue at 71%, assuming that what we saw in July is going to continue to happen. Now, the reason why I actually think that this is not more likely than not, but more likely than maybe some people would think, is how strong August has been so far. It has been insane. Crypto will make up for a larger percentage of the other revenue lines, and that pays for all of the mistakes that they could possibly make on anything else that we're assuming going forward for equities or options. That doesn't matter if crypto does well, because it has by far the highest take rate. Okay. So yeah, that's very interesting. Let's go ahead and visualize that data really quick. This is essentially what it would end up looking like, where the revenue lines would once again take another step up. It would be very, very exciting quarter for them. And on the net transactional revenue, we would also see this another massive move. So this is the interesting part, is during Q4 of 2024, the bears from Robinhood came out and they said, hey, crypto makes up for too large of the total revenue that Robinhood makes. And if that starts to decrease, they would get crushed. And to some extent, they were not wrong. Okay. That the revenue lines that we saw over the next 2 quarters, options contracts continued to climb, equity revenue continued to climb, and other revenue also did well. But that orange bar decreased so much that it brought down the total for net transactional revenue. Okay, let's just bring this up even further so we can really see it. The exciting part is that if they do well on crypto, those lines are still expected to do well. Equity is going to do well. Options are still going to hit new highs. That trend continues to build, but we still have this explosive line item that could have large fluctuations, but you know, it's not like a stock that you hold, right? Where, oh, if it goes back down, then that run was meaningless. No, this is a toll road. So the transactions lead to real revenues, meaning that they could bank that profit and acquire a company later, or buy better talent to accelerate their product development, get into new product lines like tokenization or credit cards in new areas, whatever. That build up real revenue streams that don't have fluctuation, like retirement accounts or Robinhood Gold members. Those types of products that they do innovate on that continue to grow over time don't have fluctuations in volatility in them. The only volatile part is the upward portion. That's another thing, right? Look at the amount of assets under custody per person on Robinhood this quarter. Unbelievable. Imagine what that's going to be like from this month, where we ended up seeing, let's zoom in here really quickly, an extra 150,000 new members on July's print, $20+ billion of total platform assets, more net deposits. That's only going to improve the assets under custody per customer. Okay, so are all of these people going to jump ship for whenever the market ends up not being as green as what potentially Robinhood has been? I don't know. I think that they are going to find some sticky users. And I think the best way to potentially visualize that is in Gold subscribers. Gold subscribers are not just growing, they're growing as a percentage of the total. Okay. And this is the really important part. Let me bring this up even more so people can see. Gold subscribers are growing as a percentage of the total member base. So while they continue to bring on new members, and that's very, very exciting, there is a line item here of 3.5 million customers that are not going to deviate. They're not going to get off this platform whenever markets get bad, because this is still where they're hosting their money. This is still where they have a credit card. This is still where they have all of these other features. That's why Robinhood banking is going to fit so well into the use case of Robinhood, is because it's going to add another massive revenue line. I mean, like literally it could double their total revenue. And then also that type of user is not volatile to market fluctuations. And then on top of that, that user has a much faster way to bring its money from banking over to invest whenever it sees opportunities in the markets for NVIDIA, for Palantir, for AMD, whatever, right? Faster transitions. And vice versa. If you have multiple top of funnel products, it's not just banking people that will set up an invest account. It'll be invest accounts that set up banking. And that starts to cross sell to each other as an internal product that works very well with each other. Margin. Now, this one is one that will end up being volatile. This is not the sticky product that we end up seeing like gold, but still the acceleration not only in Q2, but in their monthly numbers is insane. Now reaching from last quarter of 9.5 billion to 11.4 billion month over month. Okay, look at the changes in what they've done before. 400 million, maybe 1 billion. Not many large changes, right? 600 million, 500 million. And then you just slap on a 1.9 billion. Bang. Like, it's incredible. It's incredible. Those customers will have really deep relationships with Robinhood. Very, very high, account balances, and then also very high average revenue per user. And they could blow up their accounts, but this is a platform for adults. This is your decision. This is your money. Robinhood's not trying to tell you what to invest in. They just want to have the options for you to invest in whatever you want to put your money into. And then retirement. This is another one of those base level products that people can expand into that just continues to get stronger. So this month, man, I was insanely happy to see. Hopefully trading volume continues to climb here. That's an incredible, incredible chart. Look at this, guys. So this is not a guarantee. This is, here, you need to see this part because it is an estimate. This right here is my estimate for Q3 based on what we just saw this month. But if that does, and it could be more bullish. That's the thing. I wouldn't just discount it to the downside. They have a lot of room to also expand that even more to the upside because they're bringing on new users, right? Not only is each compounding user bringing on more assets, but they can find new members to acquire. So it could be more bullish than what we suspect. And you'd think, well, that's a pretty big jump. They don't make these jumps often, but they can. They've seen it before in Q3 to Q4. They've saw it in Q4 to Q1, which, by the way, this mode here from Q1 of 2022 to Q4 of 2023 was when I was extremely skeptical of the business. There was a lot of talk. There was a lot of hype around the business. But what I saw in the numbers was not any growth. I'm very focused on the fundamentals of a business. But you guys can go back. This is all documented. We're doing live streams all the time. I'm on a Mitch show. I'm on other people's shows before. Whenever Q1 2024 numbers happened, I bought in the after hours of those earnings. Okay? Because boy, oh boy, was Q1 the turning point. You could just see it in the numbers. You could see the jump. And then also in their guidance for Q1, how they talked about expanding in sales and marketing numbers. Okay? Since that point in January of 2024, the stock is like 10x since then. It's insane how fast, we've accelerated in growth since that point. But F Robinhood, we don't forget. I mean, 27 million people have forgotten. And they have forgotten because Robinhood has treated them right since. And the idea of, a company can make a single mistake and then that's just all trust, everything's broken. They can never repair it. I just don't believe in that. I think companies can make mistakes. By the way, they're not even the only we don't have to, I don't even have to defend them all that much. I think many people understand that what happened there was a capital issue and a once in a lifetime event that's never happened. And a bunch of brokerages ended up taking away the buy button. It wasn't just them. That was a market liquidity issue that was a first in its history. But I also think that whenever a company's brand gets hurt that bad, that they don't just put a tiny Band-Aid on that issue. You know, they're not sealing the leak with, you know, like just a, hey, you know, we're going to cover this up with press. Not only has the regulatory environment changed to benefit Robinhood even more with T+1 versus T+2 when that happened. So now they don't need as much capital in order to back those trades. But they've also probably made like the biggest issue. Yeah, they flex taped that leak. Okay. I get in fights with myself often on this channel. If you like some guy yelling over himself, you're going to love this this channel. Let's listen to Vlad. So people are talking about what Vlad had to say. Let's listen to some things that Vlad had to say on John Collison's podcast, who is the co-founder of Stripe, which I actually thought had a lot of great pieces in it. One, they talk about what I've been talking about for SoFi, about the benefits of direct deposit and Robinhood Gold and what that means on the psychology of a user and everything. So let's listen to that, and then we can continue on. There's a couple parts, so we'll probably be here for the next 5 minutes, but it's an unbelievable podcast. I suggest any of you guys listen to it. John Collison is the co-founder of Stripe, and he has this new podcast, Cheeky Pint, that he had Vlad Tenev on as a special guest. So let's go ahead and go to 1820 and have a listen really quick.
There's a loyalty element to it, which is a little bit more psychological.
People feel like they've invested in this product and they want to use it.
Exactly. So
Sorry, he's talking about Robinhood Gold, the $5 a month subscription.
Our general flow is someone comes to Robinhood, and usually they come because they want to buy a stock or they want to buy some crypto. There might be some other reasons, but those are like the simple dominant ones. Then we tell them about the Robinhood Gold subscription, and we make it clear that that's basically a no-brainer. You get like 8 things, and they might not be interested in each of those 8 things, but then they become a Robinhood Gold member. And then I think the natural tendency is, I'm already a Robinhood Gold member. As long as I'm peripherally aware that Robinhood offers a product in the category that I need, I'm going to check that first, because I feel like I'm already invested.
People want to get use from the bundle that they have purchased.
Yeah, I want to get use from the bundle. I want to get a good deal. And if we can communicate that if you're a Robinhood Gold member, you don't really have to think about anything.
Yes.
If you should just assume that you're getting the best deal in the market.
Yes.
Then I think you get Amazon Prime, Costco effect, where that just becomes your go-to place for financial services.
You have investing. You have now the
So real, by the way, this whole idea of the Costco of finance or Amazon Prime of finance. I don't just think that Vlad is going to try to do this, but I think that this is going to be replicated across many different ecosystems, right? It's not just a Spotify that tries to keep you on by paying a big amount, and then they're offering audiobooks and all these things and trying to get creators on there so they become almost a premium version of YouTube. But YouTube is also doing their own version of what's it called? I even pay for it and I don't remember what it's called. YouTube Premium. Yeah. YouTube Premium. So then you have, music and video and ad free and all these things. And it just tries to keep you on there for whenever you do have, another product or service that you need, that you're not looking for another company. I already pay for Costco, so I'm going to try to get the most out of my money. Why don't I end up going back to Costco to see if they have those, pots and pans that I want, the food that I want, the clothing that I want, the appliances that I want, whatever. So, it's just potentially that can also happen with Robinhood. Now let's skip along to 20 minutes or so to listen to his talk about direct deposit.
Truck, we would have to do the armored truck if you want bridge ticket easy to sweep EY. I think also there's an opportunity to make it really easy to switch from one bank to the other. I think part of the reason it's hard to make it as a bank that doesn't cater to the low end is you have to move all of your stuff from your existing bank to the new one. And, you've got a lot of bills, you have direct deposit from your paycheck.
Yep.
So if we can make that process frictionless, if you can just push a button and we take care of everything,
that's cool.
I think that would be really powerful.
And sorry, how do you press that button and take care of everything? Like, have you built migration?
The answer is honestly Galileo. The answer is SoFi's Galileo direct deposit switch and pay bill switch. But let's go ahead and listen.
Software from other banks, or like, what does the button do?
Yeah, so it's not out yet. But what it will do initially is it's kind of like a lot of custom migration software that links into your payroll providers and things like that. But over time, as these AI models get better and better, you should think of it as like your family office CFO, right? And you don't have to do all of the migrations for you. You just call this person and then they kind of like deal with it. I think there's no reason we can't deliver that experience within the next 1 to 2 years.
Yes. Oh, do you have any funny stories?
Let's move on to another part where I thought was very interesting in this podcast, where obviously Vlad is talking to one of the largest co-founders of one of the largest private company co-founders, which is Stripe. So now with their new products like IPO access and now tokenized private stock investments, listen to Vlad end up pitching John here on tokenizing Stripe shares for retail access.
I have a menu of options. One is obviously we can tokenize it directly. The other is you can put it in a diversified fund, a little bit less exciting.
Kind of less price.
So sorry, this person said they're using Ethereum, not SoFi. They're absolutely using SoFi. I'm not talking about tokenizing. I'm talking about bill switch and direct deposit switch is not done on Ethereum. Thank you. All right, let's go on.
Price action, essentially.
Yeah, but price action would be sort of like obscured because there would be 5 companies, let's say.
Yes. I think
you seem excited.
Exactly. You can tell I'm incredibly excited. There's multiple things. One, again, we do not sell equity to the general public today. And I think our view, just as a practical legal matter, is that the SEC takes a dim view of that. And so that's one set of obstacles. But then the deeper one is just that Stripe's not a capital consumptive business. We're not out there raising many billions of dollars to build out presumably more data centers.
That million GPU data center, right?
Exactly. And so there are these highly capital intensive endeavors that as a result, it probably does make sense to go out and raise from kind of the deepest pools of capital. Stripe is not that. It is a pretty capital light business. And so the current set of owners, if you leave aside kind of early investors, are employees. And we kind of like that model. We like the idea that it's owned by the set of people who are building it and creating the value. And then we've solved the employee liquidity question through tenders. And so I think it would be a solution looking for a problem, kind of.
But what the problem is, normal people can't get access to it, right? So what if the tenders, instead of being purchased by institutional venture capitalists, could be a little bit more democratized?
I'm never that sympathetic to that argument. The main reason is just, if you look at the underlying ownership, it's normal people through a different lens. And so who are the LPs in a company like Stripe? It's generally college endowments, it's CalPERS, it's pretty broad ownership underneath. And so it's not, when you're saying being owned in a diversified vehicle, that's essentially what Stripe is today, where the underlying owners that are not people who kind of work at the company or have worked at the company, it's generally funds, and those funds are generally people's money managed in some way. I mean, we also have a few kind of.
I don't follow Stripe enough. Now clearly they have not gone public for a very long time. Like he said, it's a capital light business. They don't need to go public. And you know, at this point, it's now sort of a running joke, and Vlad has kind of known that this is the hardest person to pitch this idea to. But now I don't follow Stripe's business too much. The idea about the tender offerings, how often are those done? I mean, sure, that's employee liquidity, but is that frequent? Like, how often can you find exits? Like that to me, I think could be solved with tokenizing your shares, but obviously, you know, that also leads to potential downsides if the stock ends up getting perceived falling lower or something like this. Maybe they don't want to have someone price their stock every single day. I also see that as well, but yeah, we'll listen to another second of this on from Stripe's perspective, but they kind of turned down the idea of tokenization pretty quick from Vlad here. But you know what? I love him shooting his shot regardless. You miss all the shots you don't take.
Mutual fund owners or something like that. And so it actually strikes me as a pretty sensible ownership structure. The other thing that we're kind of getting into in these discussions, and kind of when you announced the OpenAI tokenization, it kind of struck me as a prediction market on the future of a specific company. And I'm curious, you're getting now more into prediction markets. I'm curious what the world looks like where prediction markets become much more relevant, because that's one of the biggest changes of the last 5 years.
Yeah. I think prediction markets are awesome. It is fundamentally a little bit different than this. I mean, we'll get into the prediction markets thing, but yeah, one of the criticisms that maybe the tokenized stocks or the stock tokens offering has had is, well, these are just counterparty swaps with Robinhood, but it's not exactly that, because they are backed by the underlying asset. So in a sense, if you think about stablecoin, it's the same mechanism. Yeah. I mean, there's different paperwork surrounding it, which we can debate.
You have ownership of an underlying pot of assets.
But yeah, you've got like a bucket that you put some stuff in, and then you put tokens against that, and that becomes a tradable instrument on blockchains.
Yes.
So I actually don't think there's any criticism that you can apply to stock tokens that doesn't apply to stable coins. Like stable coins have sort of like crossed the Overton window where nobody's really talking about these things. But I think effectively from a practical process standpoint, they're identical. Prediction markets, to your point, are like derivatives in the ultimate sense. And
yeah, I think that's just you know, he shot his shot. Anyway, there was some topics being said before about Vlad or Anthony Noto answering some questions a little bit interestingly about his big, hairy, audacious goal. And he said, hey, if we said it, then that wouldn't be good for our competitors. And a lot of hood investors and other people online said, hey, that was a terrible answer. Well, Vlad also gave a very similar answer to a very similar question. So I just wanted to play this really quick.
Hood shipped so fast.
I think that it's access.
Sorry, he said, how does Robinhood ship so fast?
Accredited investor regime is not that sensible.
Yeah.
How does Robinhood ship so fast?
I think that it's just a matter of where we're focused. Let me think what the useful thing to say is without spilling all of my secrets to my competitors.
No, please spill the secrets.
If you let me tokenize your shares, I will. I think
that was a very similar answer to what Noto said. I'm just going to say, well, how can I say something without spilling all my secrets to my competitors is like bar for bar. Anyway, he does end up going into a bunch of different things here, and it was such a great part of the podcast. It was, in my opinion, my favorite part, where he talks about the actual learnings of building this company better into what it actually is. We're not going to listen to all of it, but let's spend a few minutes here because it's super important the way that Vlad runs the business and understands it. I think that this just goes to show you the strength of the leadership, because it hasn't just been all roses. There's been troubles, there's been mismanagement, all of these things, but it's how they built through it that I think shows the strength of who Vlad is.
You have to want to ship fast. I mean, a lot of people say that they want things, but then when they actually break it down into what that entails, they're unwilling to do those things. And I think you have to be confronted with the harsh reality that, sometimes the things that are needed to ship fast are not comfortable things, right? You have to make sure.
What are the uncomfortable things people are unwilling to do?
I mean, I think that you have to create culture with the right talent. You have to hold yourself to a really high performance bar. You have to have the right environment for people, which I think in our case is sort of like we emphasize the in-person experience. We found that makes a big difference. And I think we've made mistakes across all of these vectors that we've then had to revert. Which is, I think, the benefit of doing this for a while. You get to kind of try a bunch of things and quickly change. I mean, we announced we were a remote first company in 2022, and then I regretted that pretty much immediately. I was like, oh gosh, that was a wrong decision. So everyone said it was a one-way door, but it turns out it's a two-way door. You can reverse pretty much anything.
So are you guys fully in office now?
Let's skip along really quickly to some other problems and solutions here, but he does go on to talk about how he had this idea of thinking about, well, what would Frank Slootman do if he ended up taking over the company? What were the immediate things that he would, tear apart and think that we were doing stupidly? So I thought that was a great insight, and he talks about it again. We'll cover that, but there's a bunch of other great pieces in here. If I remember correctly, it's at 59 minutes.
Customers.
Yeah, we didn't have good handling or regular offering.
So your pro offering is non-existent.
Yeah, we didn't have a pro offering, and actually there were all sorts of scenarios where if you got too active on our platform and hence generated a lot of revenue for us, we would force you to churn.
That seems bad. You're rejecting your best customers.
Yeah, we didn't have good handling, and our entire business was geared towards the first time investor.
Yes.
And so these customers didn't even really show up in the data. Every time we do our standard surveying process.
He's talking about their active customers, which made up the bulk of their revenue, but was actually so few of the total customer count that they ended up having. And that they didn't actively mean to go out and acquire these customers. They just happened to have showed up for the free commission because they were trading so frequently that it was much cheaper than the alternatives at the time. But like he said, whenever we're doing surveys to see which products people want, although they're making the highest percentage of the total revenue, they're actually not showing up on the surveys because it's such a small percentage of the total user base whenever you're just looking at total user count. The high majority are the people who just work regular jobs, or just looking to buy NVIDIA or Tesla or something like this, a few shares, because they heard some tip on a bus or whatever. But that doesn't mean that those people are the ones that make up all the revenue. It's actually the high frequency, high active trader thing. And they had to find that out the hard way. But let's listen in.
We'd be like, oh, a very small percentage of our customers cares about this issue.
Yes.
But so we did some very simple things first. We were like, we care about active traders. This is what's supporting the entire business. We have to make sure they're happy. It was the reverse. The more active you were, the less happy you were with the platform.
Yes.
When we kind of grokked that, it was a nightmare scenario. So I think that's another Frank Slootman thing. You'd be like, where are you making your money?
Yes.
It's obvious. Where are you making your money? How much are we investing? Why are we investing so much in this thing that doesn't make any money? And, very little in the actual core of the business.
What were the non-core things you cut at that time?
I think we were working on a lot of things that I think were good, reasonably well motivated, but it just wasn't the right time for. Our cash card offering, probably the best example. So we had a debit card tied with a money transmitter account. Yeah, sort of similar in nature to a Cash App, Chime. It was a product for the paycheck to paycheck customer, right? It didn't work very well. I mean, it worked a little bit, but the Robinhood customer is not a paycheck to paycheck customer generally. You have to have a little bit more than that in order to become interested in investing. Our best customer.
This is why it's so important to understand, and I talk to you guys about this all the time, okay? The user demographic and the types of products that a company is putting out shows off like how good that they're actually, or like the type of customer and how well they're actually going to do. So Chime is not going to end up putting out a brokerage product and getting into investing because all of their, customers are paycheck to paycheck. And you know that because the products that they are putting out are, no overdraft fees, instant payment, stuff like this to make sure that you have money for your next bill. Okay. It's all debit cards and secured credit. It's not actually lending out people real money. Well, I mean, they do have some credit products through the, like overdraft is a form of credit. So I'm not trying to take that away. It's small dollar credit, but that's why a product like debit cards and, overdraft protection and these sort of things just wouldn't make sense in the same place where you have an active trader clientele, because those people need a lot of money to be investing, because you're obviously not paycheck to paycheck if you have a massive amount of Nvidia and Tesla shares. That wouldn't make any sense. Anyway, let's continue to listen in.
Weren't benefiting from the offering. They tended to be credit primary. And once you go to credit primary, it's very difficult. You're basically not going back to moving your spend onto a debit card, generally speaking. So I think that didn't work. There were also a bunch of little things. I mean, we were peanut buttered and spread across all these initiatives. We were generally inefficient. We were functionally organized. So at that time, I moved us to a GM structure. And my feeling there was, I was feeling a lot of stress because everything kind of rolled up into me, all these other businesses, and I had to decide which one was more important. And, the product people cared about the product being good. The finance folks, they care about costs. For the particular product area, the engineers just cared about it getting built. And I wanted more people to get the sleepless nights of having the product not working. And I think with the GMs, we got that. When we moved to GM structure and we gave full accountability to the business lines and the revenue to the GMs, it immediately improved. Because, I could look around, I could see Johan, or crypto GM. He's sweating if crypto's not going.
So you have individual accountability.
And I think that's worked very well for us as well. I think the events have worked well. That's more of a recent thing.
The marketing events.
Yeah, and the product launch events. You talk.
Hopefully SoFi's listening up, because a bunch of companies are getting into product events and these sort of like going in this direction. And listen to how successful it is for Vlad and why they are going to continue to do this.
You ask, what's worked well to get shipping cadence. I think it's always good to have on top of all the other things that you need to do to make it possible, it's always good to have an event.
Stake in the ground.
Stake in the ground. You're either going to make it for this event or you're not. And I think that can be pretty motivating to people.
Totally.
Because everyone wants to present well. They don't want to be the folks letting down the other people in the event.
We find that with Sessions, our headline customer event as well. It's very clarifying for getting products out the door.
Yeah,
sure.
And we started with one. I mean, we started with one last year, and now we're doing 4+ a year.
That's cool. Maybe last question. How's it going with Harmonic? You started mathematics.
Don't care about that. But yeah, I thought even the end part. It makes me think about SoFi a lot too. Like, he will say things like level 1 options and crypto and all of these things coming by the end of the year. I mean, that does put some heat under the asses of the programmers that are actually making these products, because they have to make sure that they meet those deadlines. In a product event, I think it even steps it up, especially whenever it's not a single product, whenever it's a multi-product line. I think those individual teams want to, in some way, outperform the other teams, So it's almost like a little competition that is all helping that entire company move forward. And it's working so well for Robinhood. I hope and pray that SoFi ends up following in that footstep, or in that design process. Now saying things need to be ready by year end still works, but I also think that can also lead to some level of procrastination because the homework doesn't need to get done until a few hours before, things are ready to go. Or that if you say, hey, things are coming soon, just wait. The times that SoFi has said that, it hasn't worked out for us on the expectation of the timeline of delivery, right? So I'm super, super excited to continue to hold on to Robinhood shares. Clearly, Vlad is taking the lessons of what he's learning and building on all of the mistakes, and he's going to make more mistakes into the future. But the team is getting better. They're getting smarter. Their product's getting really good. And the total addressable market in these companies in digitizing financial services and democratizing finance is a multi-trillion-dollar industry. So if they can keep up this level of innovation, you're just tackling larger and larger problems, right? It's not that the space that Robinhood is in right now is the end game for them. Whenever they have a significant portion of the active trader, landscape, of course they're going to continue to try to innovate on that product so they don't lose to the next up and coming player. But then they're going to want to get into payments and SMB and institutional trading and all of these other things, international. So it's all of these things that I'm really excited for the future of Robinhood. Is some of that growth pulled forward? I mean, you could probably say that to some degree. Now, I'm not selling a single share because you have things like what we just saw in July, and they end up posting record-breaking results for every single segment of their business. But it is the market is very excited on this business, and rightfully so. And I hope that also happens for the other stocks that I'm also investing in, as long as they can keep up those levels of growth. All right. Aside from that, I did want to talk on Google really quickly, because there were a couple comments that were made by some pretty interesting people. Now, brought to you by Fiscal AI here really quickly. I also wanted to show you this chart. I saw this end up getting posted by Fiscal AI. And they showed off the net income of Apple, Microsoft, and Google. Okay. And it's just incredible. This blue line here that has accelerated and become the most profitable business in 2025. And the disrespect that this business gets on a daily basis, even still today, saying that, they're going to lose their largest profit maker, search, to other companies, and they might not do as well in artificial intelligence and stuff. Yet their competitors, like Elon, who does not dish out many compliments to his competitors. I mean, he can be quite confrontational. And I mean, to some degree, he is still being confrontational, saying that XAI is going to win. But he said, outside of real world AI, Google has the biggest compute and data advantage for now. So currently has the highest probability of being the leader. I mean, I couldn't agree more. They have by far the easiest way to have the lowest cost of serve. They have all the customers. They have the distribution. They have everything, and their competitors see it. Whether the market sees it or not is a different story, but it doesn't mean that it isn't happening. And to get that point in there from Google or from Elon Musk felt really good today. So I continue to be very positive on on the stock overall. Rode in my first Waymo yesterday. It was awesome and only was $6. That's very interesting. Where was that? I have a feeling that was that in Austin? Let's wait for Tanner Invests to say, but I'm going to assume that it's in an area where Robotaxi is also in. Atlanta. Okay, cool. That's very competitive pricing for that. I live in SF. I don't take Uber or Lyft anymore. Yeah, but the pricing for Waymos in San Francisco, from what I remember, was not actually that competitive with Uber. And it was actually kind of looked at as a little bit of a, what do you call it? Like, anyway, like something that they can charge a lot because it's a piece of entertainment. I forget the name of that. I'm missing my words here. Tanner, when are we hosting a Toronto meetup for the people? No idea. No idea. Also, don't have to tip. I mean, at the end of the day, whenever you're pricing in the full price of, the cost of ride to Waymo, that has to be priced in. That's, 20%. Novelty. Thank you. That's the word. Yeah, there's novelty to Waymo right now. If you look at someone riding in a Waymo, they usually have their phone out, they're recording the event. You see it with Tesla as well right now, but Waymo's taking advantage of that in SF, what it looks like, and yeah. Who would we tip? Sundar? Yeah. You got to tip Sundar Pichai. It goes straight into his account. Self-driving, I'm super bullish on, not just for Google, but for the entire economy in general. But I do like it as a part of the bull case for Google. I definitely don't try to discount that. I'm very excited. So August 20th will be the Made by Google event. Hopefully, Google's Made by Google event will let me stream it on their streaming service, YouTube. That's my hope. If it doesn't work, maybe we'll go live on Twitch or something. And Amazon won't care as much. Who knows? But I'm going to try to do that if they let me do that. If I have to, we'll see. But anyway, that will be where they show off the Pixel 10. It's also very interesting that they have been making a lot of promotions about this phone and talking about how they're going directly for the iPhone users. Trying to convert people over. It's really just the cost to switch. That's the main thing that I think is really hard for people, is that you have just all of your conversations, your iCloud data, all this stuff that has been built up over decades that is hard to transfer over. As AI gets smarter, that stuff will be able to be transitioned over much easier. But yeah. What's your Twitch? I think it's just future investing. Legitimately, I stream on Twitch. Like, I'm streaming on Twitch right now, but 0 people watch Twitch. But it's on the off chance that somehow I get banned on YouTube or something, that I don't have 0 presence elsewhere, I guess. I don't know. I don't think I will be banned, but it is a little bit disheartening knowing that, you have, like, your online presence is owned by a single platform. That's why X is good, or Twitch, or some of these other ones. I would love for those companies to also have competitive offerings, even a Spotify or something like this, if they start to offer solutions for Twitch is for gamers, completely aware, but also it doesn't have, like, in my opinion, I do agree with you, but it is just the largest area for live streaming. They're just number one in live streaming. So if there was a offering, or if there was a finance live streaming platform, I'd be all over it. But usually the ones that are trying to go after the live streaming space for finance, they have hello, Tanner. You have 1 viewer now. Who said no one's watching you on Twitch? Yeah, thanks, guys. The same names that pop up on YouTube channels as well. That's Baba right there. Yeah, so I don't know. I think as finance gets bigger over time in the retail space, that there will probably be just a segment that gets carved out on all of these platforms, on Spotify, on Twitch, on all of those. That's my hope. Plus, it's free for me to cross stream, so legit, why not? We just need 24 plus for Fridays. Lots of options. Ooh. Well, honestly, we could make it. We're pretty close on SoFi here. We are at 2381, and we're up in after hours as well. Look at all the Twitch people here, and the same names too. It's the same usernames that I notice. Yeah. If there's any other platforms or whatever that you guys think, but honestly, there isn't. Like, there's just, like, what, StockTwits? Like, I'm not, like, I don't know. There's 2,000 people on that entire platform, you know? I don't know, brother. So, on the stocks that I'm really looking at right now, I'm going to keep a very close eye on Nubank tomorrow, especially. We'll be live, so don't worry about that. We are going to cover, sorry, I'm going to be looking into AMD more. Might even take a position to get a little bit more, you know, like chip chip diversification in my portfolio and bring that above 50%, but also not have that like under one name. So I'm not like, you know, God forbid anything happens to Jensen Huang, but like accidents happen. I mean, like a plane could go down or something like this, and then Nvidia stock is down 50% the next day. So like black swan events happen. I don't want to have that more than 50% of my portfolio. But that doesn't mean that I don't think that Nvidia is the best position for my or the best place to have my money in overall. Nubank to the moon. I hope so. I hope they post such good earnings, but I haven't really done aside from their website traffic that I've kept up with, which was really strong in Q2. I think the strongest in company history. We've seen lower than expected rankings on downloads in the app, which is much more important than website traffic for Nubank, and the C-suites leaving, and then you know, FX headwinds. That's the only problem. You can buy a new PC with an AMD CPU and GPU. Well, I would definitely want a 50 series NVIDIA GPU if I end up getting a new computer, which, by the way, ladies and gentlemen, I asked for some computer nerds to reach out to me. I got a bunch of people reaching out. I thank you so much. You guys have made it so freaking easy to understand this. There was websites I didn't even know existed, parts I didn't even know I had to understand. So, yeah. But I am looking at an NVIDIA 50 series GPU, probably like a 5080 or 5090. I just don't like the price. This is off topic, but the price difference versus the performance of a 5080 and a 5090 drives me nuts. You know? Like, if you want, it's the same thing with every industry, but like you can get to like 99% performance while staying low cost, but to get that 1% or 5% bump on performance, you pay 10x. Or well, in this case, about 2x on the actual chip for a small improvement in performance. But you know, if you can only have one GPU in there, then might as well do the best of the best. It's not that I'm gaming. I'm not gaming at all. It's honestly the thing, the part of the computer that I need to make sure that I have proper is the RAM, because it's not really rendering or gaming or anything along those lines. It's usually that I just want 50 tabs open at one point. I need to go through all my different articles in a single day. I need to go through, you know, videos that I'm getting ready to have. I need to have CNBC or a YouTube video on the background. I need to have Moo up. So that's the problem. Girls like the 5090. Yeah. Yeah, no, it's like that meme where it's the girls in the club that are like whispering, like, do you know he has one whole Bitcoin? Like that whole thing. Let's check on Bitcoin really quick. 123 123,675, a little bit off its peak, but we did end up breaking new highs. That was quite exciting. Another check really quick. Let's check ETH. 47.40 right now. Another very strong, amount over the last 5 days or so. Look how much we're pushing higher here. Yet, if we check BMNR really quickly, 61.63, a little bit lower at the end of the day, and SBET up 4.6%, but pretty flat over the last 5 days, only up 7% versus Ethereum, and yet the amount that they're actually accumulating. I would think that they're moving higher, but that name is not moving as much as BMNR, that's for sure. Glad I have my Bitcoin. It's a must-have for any portfolio. I definitely have Bitcoin, Ethereum. Solana is still my biggest coin, but that might start to rotate away if institutions are not actively using Solana in this, the tokenization of real-world assets. Okay, a couple things. One, the most amount of dev work will get done on the largest and most capable L1s, like Ethereum, Solana, stuff like this. So there are network effects to this. Now, it doesn't mean that it's all going to happen on one chain, because I do think that interoperability is a big thing. Like, I don't think the real world assets play needs to happen all on Ethereum, for example. But I do want to be where the activity is. And Ethereum really does have the chance to continue to push higher. And if Tom Lee is correct, and he thinks that Ethereum's going to 10,000 or 12,000 by end of year, and there's some estimates on tokenizing real world assets for a multi-trillion-dollar industry, brings Ethereum up to $40,000+ a coin. Not saying that is going to happen. These are just the speculations of the activity on the coins end up making more gas fees and helping burn more coins, and having more holders of those coins, it does increase the asset price. So I think if you think of Ethereum as a technology company, it makes the investment much easier. Just what's the utility? Is there people coming back? Yeah, I don't know. And then they pay a dividend, and there's a buyback system that's also created. It kind of makes a little bit of sense here, but Ethereum is basically a competitor to Visa and MasterCard. Well, I actually think it's much bigger than that. I think it's Twitch is like 2 seconds ahead of YouTube. Well, there you go. There you go. But that's what I mean. Like Twitch, I don't think has to be a gaming platform. I mean, they just have the most advanced, streaming platform. Now, I don't think at the end game people care about 2 seconds, or maybe even 4 seconds. Okay, you're going to peel people away from my YouTube stream, but that's okay. When you're there, hit follow, okay? What was I going to say, though? I think Ethereum's even much bigger than that. I really do think that there's going to be a tokenization of all assets. I'm a big believer in the digitization of the world. And blockchain has just happened to be a very safe and secure way for people to put that all in one place. Nick says, hey, I just created an X account to follow you and Amit there as well. Thank you for the investment insights you gave us. I started investing less than 3 months ago, and you've been a great help. Nick's Hobbies channel, thank you so much, brother. I do appreciate the donation. Happy to help. Once you get into it, man, it's the best game ever. Investing is one of those things, I don't know. I've never been a big sports guy. That's okay. I respect people who are into sports. But the thing that's always bugged me about a lot of sports is that the time that you're able to play them in the grand scheme of your life is so small, between having to start extremely early to be competitive against the greats, while also, not being too old or whatever, where, your body starts to slow down. You can't compete with young 20-year-olds or even teens that end up playing very well in your sport, whatever the sport may be. But usually it tends to lean younger. Okay. Whenever you look at the greatest of all time for investing, they're not young, they're old. Okay. Because they've just had a ton of life experience. And it's not just stock experience. If you're new to stocks, but you've had a lot of life experience, that also benefits your investing knowledge, because you understand how these technology rollouts work. You understand the habits of consumers and these sort of things. Like, it just benefits an older individual. And for the young people who are getting into investing and think that maybe investing's not on your side because you don't have those, or that time under your belt, that's the amazing part, right? Is that you have 60 years or 40 years of focus to get good at this game that, doesn't just benefit you in this game, right? That was also another thing. Whenever I was picking like what I wanted to do with my career and get into all these things, I didn't want to get into something that wasn't going to benefit, outside of my life. So I always use this as an example, but if you do this for work, like, I'm not trying to pick on you. It's a great line of work, but like an air traffic controller, the minute you step out of the office, out of the tower, right, all those lessons and books, that everything that you've studied for is no longer useful in your day-to-day life. At least that's the way that I think about it. Maybe that's not true, but the way that I see it, I can't imagine directing planes on where to land does well for the, understanding the supply chain of your even local grocery store. But finance does. Finance affects everything. And the benefits of learning finance affects every aspect of your life. Now, I'm not saying that I think most happiness is derived outside of finance, but also the ability to spend time with your family and enjoy the moments that you want in life also can be accelerated or enhanced with not having financial problems. I love my girlfriend more than anything on earth right now. Okay. But if we had financial troubles, most likely it would be a lot worse. Things would be a lot worse, meaning that there is something there is a problem. There's no problem there, but I'm happy that finance is not one of those problems, because divorce rates, if you look at the highest thing that ends up causing divorce, it's financial problems. So if you're old, it's not too late to get into investing. You have so much life experience that enhances your journey in stocks, right? Because that's essentially what we're betting on, just economies, people's habits, consumer trends, all of these things. You've seen a lot of it. If you're young, get studying, because you have a long road ahead of you of compounded growth to make you not just financially rich for yourself, but for your kids, for generational wealth. A lot of that, most of that has been built through, the financial industry. That's why a lot of people want to get into finance, at least in this generation. Might actually be tech and engineering in these newer ages. There's a lot of generational wealth being built on software engineers, but for the last probably 40 years, it has been built on Wall Street. I'm 17, Tanner, and you've taught me so much. Brother, keep learning. You're doing awesome. I remember when you were here, even I think you said you were 16, obviously you were 16 before you were 17, but you've been here for a long time, and God forbid you take care of your health and nothing happens to you, that you're going to be around for a lot longer than even myself. And the lessons that you potentially learn in markets will take you a long way, and will take your family a long way. So it's the greatest game alive. I freaking love it. Man. It just makes you understand. I mean, I got into finance. I didn't want to get into, I don't know. I've learned a lot about energy and about EVs and chips and the way that banks make money and the way that Visa and MasterCard's cards actually work it's just the game of learning. How much do you know? You know, that's the great part. It's just the best. I hate finance. I'm just interested in tech and the macro management of tech. Well, I mean, honestly, I think that what's great is that I don't think I'm super interested in the balance sheet side of, financials. I think it's important to understand, and there's aspects that everyone needs to understand there. But I think the more fun thing and potentially where most capital is being generated right now is in private markets, venture capital, stuff like this. And some of the richest people on earth were angel investors or investing in seed rounds for upcoming companies like Uber or Facebook or some of these things. There's no balance sheet understanding for these businesses. They don't have any. It's ideas, it's understanding consumer behavior, it's understanding trends, cost savings, market dynamics, and that stuff is fun, in my opinion. It's also why I'm able to invest in SoFi or Robinhood. It's like if you look at these companies versus their financial peers, you would say they're expensive. But if you didn't understand that the trend is going more in their direction, then you wouldn't be able to invest in it. But if you do understand that, then you understand that they're still very cheap because they're skating where the puck is, and the financial legacy player or the legacy players are falling greatly behind. Bubbles in the Tub said, Qubits, ride with me. Absolutely, good sir. Let me screenshot that. Qubits will do. So we have a community fund here on this channel. Let's take a look at how it did today. Pretty good. You know what? We're starting to recover, ladies and gentlemen. When SBET does good, we do good. It also helps that SoFi is green. So let me drop the chat really quick so we can see. Or actually, no, I'll leave you guys up. But we got in a little bit of hot water here. Okay, fell a lot. Now this entire portfolio is made up of the donations of people in chat who get to decide where we're going to put this money. And SBET has made it up very high on the list. SoFi, of course. Robinhood, of course. ABCL, PayPal. These are names that I'm very comfortable with. ABCL, PayPal, SBET, SoFi, Robinhood. Now, I'm learning now that you guys very much like healthcare, ABCL, UNH. Sure, we could find some other one. Oscar, Clove, but TMDX. It's kind of interesting how much healthcare there is in this portfolio. But overall, I think we do have Qubits in here. Where is? Do we have any? Here, let me search for it. Yeah, we do. We have a little bit of Qubits. And let's check total for Qubits. We're up 15%. So that would not have been a bad one. Why is the portfolio value hidden? I just thought it was kind of weird that I think the donations had came in much faster than I ever thought that they would. And I didn't want it to be weird if the number gets to a point where, I don't know, it doesn't feel comfortable anymore. So, yeah. But I mean, all the transactions are transparent and tracked on the website. So you can go through and just add up every number that's on there. It's not completely hidden. It's just, I don't know. Shark Ninja following an incredible earnings. Mamba mentality. I feel very comfortable with that pick. Thank you so much. I will make sure that happens. We get that. Shark Ninja, I'm super, super comfortable with, man. I love all their products. I use them on a daily basis. Anytime I'm looking for something new, like a small appliance, I make sure to check to see if Shark Ninja doesn't have it already. And if they do, I purchase it immediately. You know, and then on the other hand, I think that while they are dealing with these sort of on the counter small appliances, they will continue to build up. Like, I mean, when does Shark Ninja get into microwaves and dishwashers and washer dryers, refrigerators, ovens, stovetops, whatever? And whenever that happens, you lead itself into such a large total addressable market. They have started to get into bigger appliances. You can actually find Ninja barbecues, full-size barbecues, and with the Ninja-esque style that they have, it's got all the bells and whistles on it with the fan that helps do the smoking in the bar. I don't know. I'm not a what are they called? Barbecue masters or whatever. But yeah, bells and whistles. All the Shark Ninja products are great except coffee machine with plastic parts due to microplastics. So Confidence, I actually want to know, what do you use? Because Pitmaster, thank you. I used to not care about this stuff. Now I've actually become one of these people that have gone like super health conscious to some degree, but I do use their coffee machine. But I just recently swapped out all my like non-stick pans and everything for all stainless steel. And to be honest, I absolutely hate it. I like, anyone that knows how to cook will tell me I'm crazy because I bought all these super nice, really expensive stainless steel pans. But boy, oh boy, is it so annoying. Everything sticks. I understand you got to heat it up. You got to use fat. I get it. It sucks. The cleaning sucks. Preheat the pan longer. No, I did the whole, you put the water in it and then you got to see it beat around. I get it. But get a nonstick. Yeah, but I'm trying to do it for the health purposes. If a nonstick pan is super nonstick at first, and then as time goes on, it becomes less and less nonstick. I don't know if that, every bit of that Teflon or whatever, I'm forgetting the words, is not going into my food to some degree. So I am becoming a little bit of a health nut on those types of things, and would like to stick away from the microplastics. As I heard, there's like a credit card worth of plastic in my brain right now. But supposedly there's a company now where you can do a blood test for microplastics, and that they are doing, or there's been some studies on filtering blood, which has been a thing for a long time, but actually starting to pick up microplastics in that. So they're looking into it right now. But yeah, where is the non-stick going? Where is it going? I just don't know. Yeah, that's so funny, man. Ninja cookware. That's actually not. That's the one thing I didn't buy. I didn't buy a Ninja cookware thing. I ended up just getting like some. I forget what it was, but it was at Costco. Even though every product at Costco is Ninja and Shark products now, but I don't think that one was. Gotta die of something. Do I, though? Do I? Confidence, Chaz, I saw that you said you got to invest in health number one, but I didn't see where you said about your coffee machine. Maybe I need to scroll. Okay. Just cook with sticks like the pioneers. You're so right. All right. All clad. I thought those were like hybrid mixes of like stainless steel and nonstick or something like that. Am I misremembering like those hex clad stuff? They're like hybrid versions of cookware and stuff. I don't know. I'm learning about pots now. Yeah. Okay. We'll get off the pots. You're right. You're right. Big mistake on this finance channel is I always get off into some terrible conversation about either jujitsu or health or sports, and then you guys make fun of me. You're right. Going back to health stuff or finance stuff. Super happy with Google pushing higher. I know Roy wants me to understand the bear cases that he says. I'm not buying into it. Not a believer. Very excited for Amazon. Very excited right now for Shift 4. I think that might be the deal of a century. Not deal of a, that's an overblown statement, but that could be the deal of H2 2025. And starting to run over the last few days since Jared Isaacman started buying. So now we're back above 90. Yeah. Ladies and pot frenzy. Yeah. Shift, like a gear shift. Ticker symbol FOUR. Amazing payments company owned by Jared Isaacman, the previous head of NASA, but it's not a space company, it's a payments company, but they do deal with a lot of space companies like Blue Origin, SpaceX, stuff like this. A pretty interesting company. Growing very fast, high margin, free cash flow positive, buybacks, insider buying like crazy, extremely low stock-based compensation, organic growth and non-organic growth. I mean, the list goes on and on. I mean, it's a healthy business. Isn't payments super crowded? Absolutely. So finding the company that is, working is a very special thing to do. So is payments crowded? Yes. Do I look at Adyen and go, oh my gosh, wow, they have, they're growing faster than any other company in this space? I mean, that's also true. dLocal today just put up insane earnings. It completely in the payment space, but how can you disregard them growing, TPV by like 50% on a foreign exchange, or just on not constant currency basis, just on like GAAP, 50%. So for or dLocal? Well, I think the truth is I don't know enough about dLocal right now, and I know Shift 4 very well, and that's growing or doing well, but I do need to do more due diligence into dLocal. Adyen is so big in Europe, I use it 3 times a day. I mean, yeah, they dominate. And they're coming to the States. They're growing like crazy in the States. And yeah. You didn't miss the ship on dLocal. Look at the stock, man. That's the thing too. People will see unbelievable earnings and then say that they missed it. And it's like you're buying for the earnings that you see today. You like if the stock just had a price and you didn't see the historical amount, like there's a way to look at companies, which some people call like owner's mentality or something like this, where you look at the company as if you were buying the whole thing, whether it's up 100% or whatever. I mean, guys, people are buying Meta in 2025. You've had a decade or like multiple decades to buy this company in private markets and everything. And I mean, if you didn't get a chance to buy it in 2009, did you miss the boat? Like stocks have long times to live out their lifetime or to live out like their life cycle. So I wouldn't just say that you've missed the boat, especially on a company that is, hold on, $3.3 billion. What are we talking about here? So You have time, Kelson. Plus, you're 17 years old. You have more time than anyone else in chat. You didn't miss the boat. Now, I'm not saying to go buy dLocal because I don't know them well enough, but they're a $3 billion company. Yeah, no, NVIDIA is another great one. Like even in April. So from the time where I was banging on the table for people to really look into NVIDIA, I think it was like $90 a share. My average at the time was $5.80. Now it's like above 20 because I bought so freaking aggressively. Yeah, I don't know if there's still a deal going forward. A deal's a deal. Doesn't matter what someone else paid for it. Matters the only time that you should care about the price is whenever you're buying or whenever you're selling. Time is more valuable than any gains for now. Until the time comes where you get to buy time with your gains. I heard that quote, I think it was like a Tony Stark thing of like, no amount of money has bought any amount of time. And I'm like, I don't know if that's true. Like, Jeff Bezos looking healthy, you know? I think he might be getting some. I don't think it guarantees you time. But yeah, I mean, there's a lot of good quotes that come from movies. Come on now. Yeah, you retire early, you reduce stress. I don't know. I'm a big fan of taking care of my health just in general and spending time with my family and stuff. So I'm not like being like, oh, you know what, just focus on finances. But I don't know how clear that statement actually is. No amount of money has bought back any amount of time. I don't know. If I had an unlimited bank account, I would run marathons and lift all day. Do you know Ray Kurzweil? He says that the life expectancy is going to go way up in the future with nanotech hitting a new milestone. Well, I do believe that, but I do know Ray Kurzweil a little bit because of the singularity, but not. I don't listen to him often. I think I listened to him on the Lex Friedman podcast, if I remember correctly, a while ago. But yeah, I do think that technology is going to get better and life expectancy will go up. Did you gym today? You were slacking, no? So I gym after my lives most times. But yeah, I did end up working out last night and having a sauna and then going to bed. I try to do that most nights. Shoulders are looking small, Tanner. Yeah, no. Now I'm definitely going to do that today. I wouldn't consider myself a runner. No, I do try to run, but to call myself a runner, absolutely not. I'll run a 5K though to get a little bit of heart health and continue on, but I'm not running marathons, that's for sure. But I would love to. It's on the bucket list. Just I don't know if I want to train for a marathon while working right now. Tanner, can you do a pre-market stream tomorrow? Amit is moving. That's hilarious. I don't know. Who's reporting tomorrow morning? JD.com, John Deere. I don't really care about tomorrow morning. I care about tomorrow night, which is a new bank. Yeah. We'll be doing a full stream for Nubank, like 2.5 hours. Please. What are we going to do? Maybe. Dude, everyone calls me the substitute teacher. Like whenever he was in the event for the Robinhood event, which they invited me as well, but it's just harder for me to go all the way to New York from Toronto for a single conference. Wasn't going to happen. So yeah, whenever we took over his stream and streamed from there, everyone was like, oh, it's like being taught by a substitute teacher. It's like, I'm not teaching anything. We're just listening to an earnings call together. What time for Nubank? I'll be live probably at 3:45 to watch the earnings close and the reaction of the stock. And we'll just have to see what happens. I mean, good or bad, it'll be one for the ages. A pivotal quarter for Nubank, let's hope. In other news, Citron Research, Andrew Left told Fox News he's short Palantir and added to his position after earnings, calling the trade obvious. He said he likes the company and the CEO, Alex Karp, but thinks the stock is overpriced. Now, I'm going to add on to what everyone else has said, but I agree that I think that the stock is overpriced, but I've also thought that it's been overpriced a double ago, So, how, I would have been wrong by, if I started that short at 90, So I just think it's something I would never, ever short. And most of the market understands that as well. They have like a short interest that's less than 2%. But yeah, it's impossible to short. Yes, I completely agree. You're not gonna buy my affection to stream in the morning. If I decide to stream in the morning, it'll be something that I don't know. Make sure you hit the notification bell down below. That's the only way you're gonna know. See how I did that? All right. Palantir has TAM. No, that it does. That it does. I do love TAM. I do. I need the morning news. Dude, I don't wake up that early. Yeah, I just, it'd be so painful. TAM means total addressable market. So there's, what is it? Is it, oh man, serviceable attainable market, serviceable addressable market, and then total addressable market. I think that's what it is. TAM. Am I getting that right? Yes, I was right. Serviceable obtain. Oh my God, I'm so good. Okay. So there's 3 different types that you need to understand, really. And TAM is by far the biggest. Doesn't mean that they're going to grow into that entire market, and that most times it means quite the opposite. Serviceable addressable market is more closely to what people should look at, but I always say TAM because at some point a company can grow past what they're already doing, and you want to see the total amount that they could end up going after. Yeah, so very important to follow TAM in the companies that you're following, because if they, have a massive market cap and the total amount that they can grow into is only a little bit bigger than that, then you're assuming that they're going to take over the entire market. I don't know. It's just important to look at. When's the Williams Sonoma earnings call? I couldn't tell you. Couldn't tell you. So I hear you're a Toronto man, Zay. Yeah, I am. I don't talk like that, but Tanner, you look like you water your grass every day. I've been known to water my grass. Been known to, yeah. Okay. Do you think that Google and Meta are going to compete with Palantir? Well, I definitely think Google to some degree will. They also got selected as an AI vendor for the government. Now, to what extent that actually means, I'm not sure. I don't follow Palantir closely enough. But as you've seen from the reports that they want to lower the reliance on Palantir, which I actually think is a bullish statement for them to make, because it proves just how strong the technology at Palantir really is. But like we saw similar comments from NVIDIA as well, from companies saying, hey, they need to reduce the reliance on NVIDIA. It's actually not always a bad sign, because you have to prove that you can. Just because you want to, because that gives a single company a lot of pricing power, doesn't mean that you can objectively. So that's a really good sign from Palantir. But might also be a good sign for Google if they can offer some sort of product that reduces the reliance on Palantir, but not sure. It's not quite the area that I look at for Google. I am mainly focused on their large services, search, cloud, YouTube, Google Network to some degree. But yeah. You see D-Local's earnings or what? Yeah, it was crazy. I need to do more research into the company. It's nuts. But I think they're up 26.3% in the after hours right now. It's incredible. Over the last 5 days, you're up 42%. 5 days. You bought last week, you're up a ton. Wow. Tanner, what do you think about the Rubin delay rumor? Yeah, it was quite interesting. It's why I potentially want to buy a little bit of AMD. That was mainly the report that I ended up seeing that made me want to get bullish on AMD. Not that I even liked their earnings all that much, but if the MI 450s, which I think was the one that was reported in the call, is delaying the Vera Rubin so they can focus on their current customers for what they might be replacing with MI 450s, then I want to take that seriously, and I want to have shares in all the potential companies that could benefit in this semiconductor revolution. You got a monitor on the ceiling? No, I've shown you guys a couple times, but I do have I've got a monitor here. Yeah. I don't know how I can. Maybe I can just like put my camera on or something. I don't know if, like, this is what I stare at every day. So here's the camera. This is the smallest view, man. If I had like just a mirror, I just don't have a mirror for you guys. But essentially, what you end up seeing here is my camera right here, which that's why I always say sometimes my view is just being disrupted by the camera in front of me, because it just sits in front of my monitors. And then there you guys are over there, the chat. News. Up there is news. Over there is more news. Lighting and sound stuff. Hard to show you, but Yeah. So if you see me looking up, it's just all monitors. And then an iPad and sound equipment and a Stream Deck and yeah. You should get into Micron. It's incredibly low peg. I mean, Micron would definitely fit well into my portfolio. I've just always had more concern on the storage side than I have on the GPU side, but Micron definitely could fit in well. What do you use to aggregate your news? I mean, a lot of things, a lot of different solutions. Do you do red light therapy? So I do not, but I've been really looking into it a lot lately because there's been this company that will sell a red light thing that fits directly into my sauna. So I was thinking about doing both at the same time because it's not affected by the steam. But I also do it before bed, so I didn't know if like throwing a bunch of light on my face before going, like, that sounds counterintuitive. That sounds like a morning routine. So yeah, I do not do red light therapy. But yeah. Yeah. Oh, do not do blueprint garbage, please. It's not. I don't. I wouldn't necessarily put that under blueprint garbage. I would just say there's a lot of people that are talking about red light therapy. I don't know if that's exclusively a Brian Johnson thing, but yeah. Do you have Seeking Alpha Premium, and if so, is it worth it? I think that if you, I just recently had told, I do have Seeking Alpha Premium. If you're really interested in the articles and follow a lot of people that are on there, which I do, and conversate with a lot of people, it's how I found who Stephen Fiorillo was. Then I think it's worth it. If you're into the news, if you're into the financials or anything like that, there's just such better platforms for that. And I think like that's why I've partnered with Fiscal AI, for example, is because whenever you're trying to actually understand the financials of a business or go through their reports or do these types of things, that part is amazing. But they'll never be able to replicate the community, the names that are on Seeking Alpha, because they're exclusive to Seeking Alpha. So if you like the news, it could be worth it. But yeah, I guess it's sort of your budget for what you want to put towards information for stock investing. Mine's pretty high. I spend a lot on the information that I aggregate and the tools that I use and all of those types of things. So it depends on what you like. Some people try to do it completely for free and use all the free tools. And to me, that hasn't worked out as well as I think having really good information is worth its weight in gold whenever you're investing with a larger portfolio. It pays for itself. I mean, the Bloomberg terminal is the main thing. No, 100%. I don't want to spend that much. I'm not spending that much on my data. As an individual investor, I think that 32 grand or whatever a year is a little overkill. But I think that there are some amazing retail-focused solutions that are a few $100s a year, and you have a couple of those, you can kind of get everything done across maybe 3 subscriptions. So having about $1,000 budget versus having, a $32,000 budget is a big difference. I just watched Twitter accounts that repost Bloomberg terminals. 100%. And a lot of the people that do that too, they work at other companies and they just use their Bloomberg terminals that, their company is purchasing for their, for their actual analysis work that they do. Tanner, is Snap the new Meta? I heard that today. I'm so sorry to the Snap investors, but I would say 100,000% no. Sorry. I mean, maybe maybe Snap has something cool to it. I heard something really interesting that, like, in a world of online, everything is public, and like people do still need a place where there is privacy, where there is a guaranteed level of, hey, whenever I send this message, it will be deleted. And that a whole bunch of young people have diversified their social media presence to have I was going to say some Snap allocation. I've got this finance brain that ruining my life here. But where they do use some aspect of Snapchat because they know that there's a part of their life where they want to say something to someone, but then also, it just gets deleted in general. So for me, I don't use it. I don't think anyone of the older generation really, I mean, I could be wrong, but from what I see, it was not my generation. It's all the generations after me, and those people seem to like it. But I've never understood Snapchat and the financials and other, like, I don't really understand Reddit. But then I see the financials, I go, man, you know what? I should really get to know Reddit. I don't understand Snapchat, and then I see their financials and I see their performance, and I'm like, you know what? I don't need to learn this business at all. I'm not here to look up the companies that aren't working. So, yeah. Tanner, it was our generation. Well, it wasn't me. I don't know. I messaged people on Instagram and stuff like that. Not Snapchat. Tanner, drink water. You're so right. Tanner's just a boomer, 27-year-old. Our age group was the core Snapchat group until like 2 years ago. People get serious relationship and leave Snap. Well, that's true too. I have zero purpose to have Snapchat at being someone in a serious relationship. And I don't know if that's something that's like Snapchat doesn't want me to say. Maybe they have a whole thing but that's like going to Tinder to be like, oh no, they also have a product for friend groups. It's like, okay, but also, if you're someone in a relationship, don't meet your friends on Tinder. Like, I don't know, like, go out. Snapchat is not the place for me to be. Only people like, yes, if you're 17, go on Snapchat, whatever. Ladies and gentlemen, thank you all so much for watching. But I think now, let's quit while we're ahead. It's been a great time. I'm hungry. I gotta go. Subscribe if you guys want to see some more content. I'm gonna try to get back to daily uploads and these sort of things. Bye for now.